when expenses are incurred and decreases when adjustments and decrease with adjustments. They are debited when the expense is recorded and credited if cancelled. Their normal balance is debit. And one example of this is if we pay $12,000 for utilities and office salaries, administrative expenses is debited. Okay, the next is retained earnings. Retained earnings represents the profits that a company has decided to keep rather than distribute as dividends. It increases when the company has net income and decreases when dividends are paid or when there are losses. We credit retained earnings when recording profits and debit it when paying dividends. It's normal balance is credit. And for example, if the company earns 50,000 net income, we debit income summary $15,000 and credit retained earnings $15,000. If later 5,000 are distributed as dividends, we debit retained earnings $5,000 and credit dividends payable $5,000. Okay, the next is called dividends. Dividends represent the distribution of earnings to shareholders. This account increases when dividends are declared and decreases when they are paid. Although part of equity, dividends have a debit balance because they reduce retained earnings. We debit dividends when declaring them and credit them when they are paid. Its normal balance is debit. And the example, if the company declares dividends of $8,000, we debit dividends $8,000 and credit dividends payable. Well, I'm missing a few minutes, so here I will add more assets and liabilities accounts. So let's start with the assets. Okay, for the assets, we have accounts receivable. Represents the money owed to the company by customers who purchase goods or service on credit. It increases when the company sells on credit and decreases when customers make payments. So, we debit account receivable when a sale is made on credit, and we credit it when the customer pays. And its normal balance is debit. So the example, if a client buys 4,000 of merchandise on credit, we debit accounts receivable $4,000 and credit sales $4,000. Later, when the client pays, we debit cash $4,000 and credit account receivable $4,000. The next. Okay. The next, prepaid expenses. Prepaid expenses are payments made in advance for goods or service that will be received in the future, such as a rent, insurance, or subscriptions. It increases when the company pays in advance and decreases when the expense is consumed. We debit prepaid expenses when making the payment, and we credit it when recognizing the actual expense. The normal balance is debit. Okay, another example of prepaid expenses. If the company pays $6,000 for insurance covering 6 months, we debit prepaid insurance $600 and credit cash $600. Each month we transfer $1,000 to insurance expense. And the last asset, machinery. Machinery is a fixed asset that represents the equipment used in production. It increases when new machinery is purchased and decreases when it is sold or disposed of. It also decreases gradually with depreciation. We debit machinery when purchasing it, and we credit it when selling or removing it. Its normal balance is debit. Example: if the company buys machinery for $25,000, we debit machinery $25,000 and credit bank loan or cash $25,000. So finally, the last two liabilities. Okay, first, salaries payable. Salaries payable represents the wage to employees for work performed but not yet paid. It increases when employees earned salaries and decreases when the company pays them. We credit salaries payable when recording the obligation and debit it when making the payment. Its normal balance is credit. Okay, and the last account for liability, it's owner revenue. Represents money received in advance from customers for goods or services that have not yet been delivered. We credit owner revenue when receiving the advance and debit it when recognizing the earned revenue. The normal balance is credit. And we finish. This has been my video about accounting and the main accounts, assets, liabilities, and equity. I hope this explanation helped you understand how these accounts work and why they are important for a company's financial control. Thank you very much for watching.